Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open this week's webinar, the Australian dollar remains weak after the New York session posted a 5-month low of 75.35 and also was the objective of 75.25.35 or more, in this case the base. At present, I do expect to see further coverage to the upside. Reason behind that is we are oversold, and the market from the RSI and also from the stochastic does initiate a potential recovery with immediate target coming in at 75.90 and reassess from there. It is unlikely though any further advances beyond the 76 handle to find a cap around 20.35. The longer the risks that we remain down here, further gives a potential bias for a bullish recovery. In the event we do take out 75.25, then this will give further grave concerns that the target comes in at 74.5, maybe down towards 73.65, 75. But that call is not quite in place yet due to the oversold condition that the Australian dollar is sitting in. Very interesting price action on Friday. After last week's rejection of 118.50.70, the market is now looking back towards the support. There is still a bit of work to do, even though we're just cutting through the support at 117.55. I do expect to see further weakness if we go beneath 116.90. This would initiate further weakness to the recent objective that I was holding at 115.5. Any advances should find resistance around 118.05. and with the broader cap of 118.50.70. While the dollar yen is still lacking momentum and showing concerns that we could see a test towards that base at 111.60. With support seen minor at 111.90, may hold there in the short term, but if we see a break there, that would expose the challenge of 111.60. I do expect to see a recovery from there because we are oversold. Failing to find support from 111.60 could open way towards 109, which is a little bit concerning if you're holding from a long position. If we get another rebound like we saw back in October from 111.60, then we are looking towards initial resistance coming in around 112.5 to 112.90 figure. My pound outlook is still neutral, due to the fact that we have lacking technical confirmation of a direction. With that being said though, we did get a high of 132.60 on Friday before retreating back. Now at this stage, we're still in this roller coaster ride of 130 to 133, and I'd rather sit out until I get further confirmation of a direction. Interesting price action after gold rallied, or should I say surged, to an $18 move on Friday after geopolitical uncertainty once again heightens after North Korea ruled out negotiations with Washington on curbing its nuclear weapons program. It was the strongest move in a month and hit a high of 1,296. Now, at the moment, we are retreating slightly from this region, but I believe the market is now looking towards 1,310 if we clear 99. Any pullback should find support towards 91 with a base now seen at 86 to 88. And to wrap up with oil, well, the market did recover slightly on Friday after the Baker Hughes report said there was no change to the weekly US oil rig count. At present, I am still bearish as long as we maintain underneath $58 a barrel, with the immediate target holding at 55.5. Although if we do get a break above 58, then this would see further concerns to the rally of a move to $62 a barrel, but I don't have that view. Until I get confirmation from any of the indicators, then I am still a sell on strategies and I do look for that downside test. So that wraps up today. Thank you very much for joining me and I hope you have a wonderful new start to the week.